What's up, trader? As a retail trader, the only reliable source to read the market is candlestick pattern. Now, candlesticks are alphabets of the market. To read the market, to become a profitable trader, there is no alternative but understanding the candlestick patterns. But there is something more on it. I have already released my one secret candle part 1. Probably you have seen that about middleman that has gone viral. Now today I will be releasing another secret candlestick pattern as a part 2 that will change your trading pattern completely. I will be explaining everything what this secret candlestick mean, how you can find profitable trading opportunity, how you can predict the market based on this one secret candle. If this is something you're interested, then smash the like button, hit the subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. With that being said, let's get started. Okay guys and girls, so before I go to the actual lesson, let me give you a quick idea of what a candle mean if you are completely beginner in trading. So what a candle mean is a representation of the buyers and sellers activities in the market. So let's say this is a candle and let's assume that this is a 1 hour candle. Okay, so what this 1 hour candle mean is that this is the time when the hour started and the candle started. As soon as the candle opened, the sellers first push the price down to this level, which is the lowest possible price in that period of time. And once the price came here, the bulls started to push the price high way above to this level in that period of time at some point. And then this is the highest possible price in that period of time. And the sellers pushed the price down well below this level and closed in that level. So this is a complete candle in that hour. It's a bullish candle. When the price open closes above open, it's a bullish candle, means that buyers were in control in that period of time. So this is the a general representation of the candle. Now let's jump on to the actual lesson to see what that one secret candle mean and how you can use them in your trading. Okay guys and girls, so I want you to pay full attention to it. Now I'm going to explain what it is and I'll show you in chart how you can trade this kind of candle with a high probability. Okay, so first of all, consider this one, this red candle. Consider that this is a bearish candle. So what does it mean? That the market opened here, okay, and little bit of, there could be a week or without week that the price could go up and come back. It doesn't matter. So the market opened here, and as soon as the market opened, the sellers push the price down to this level, well below this level. As I told you, this is the lowest possible price in that period of time. It could be an hourly, 4 hour, or daily candle, doesn't matter. And then buyers bought this market, pushed the price here, closed in that zone. So this is a general representation of a bearish candle. Let's assume that this is a 4 hour candle as an example. You can apply this to any time frame. Okay, so this is a bearish 4 hour candle. Now why specifically this candle is represented in this lesson, let me tell you, is that you can see that this kind of candle which has a long wick at the bottom. So when you see that a candle with a body, a healthy body, let's say around 50% of this candle is body, and around, let's say, 50% or more of this candle is weak. Okay, that means this is called a wick of the candle. Okay, that means the price came here and then closed above. So when you see a candle like that, in certain situation, in most cases, you see that the price is revisiting this zone again. Smash the like button now. I'm telling you again, when you see these candles in a specific zone, okay, you will see that in almost 90% cases, in 90% situation, you will see that the price is revisiting this zone here, okay, must. And why it is revisiting, first let me tell you the theory behind this, that what this candle basically represent is a normal language of the market. So what is the language of the market is that, let's say a trending market. How does market moves? The market moves like an impulse, okay, this is the language of the market, followed by a retracement or a pullback, correction, and then there will be another impulse or followed by a retracement or correction, and then the pullback to the previous resistance zone as a support, and then impulse, correction, like this, okay. This is the normal language of the market. So what this candle represent is that basically you see that this is the bearish candle, right? When the price opened here, the price basically created this impulse to this zone, and then the price created this week is basically a correction or a pullback of this impulse, okay. So this whole length is an impulse, and this week is a pullback or a correction. So when a healthy market must go an impulse with a correction, this is called a healthy market. So when correction is done, pullback is done, what is the next step? Another impulse, okay. So in a downtrend, the same thing, impulse, correction, what is the next step? Impulse. That's how the market moves. So because we see that there is an impulse and there is a correction, we can expect another impulses in this, in this fashion. Now if you see this, I will tell you where you can find a high probability setup for this kind of candle. Now when you see the market closed here, after closing here, if you see that the market again went above, that is further confirmation for dropping down, and that is a really good trading opportunity, especially when this happens in a higher time frame, such as if you see a monthly candle like that or weekly candle on the lower time frame, you might find a lot of trading opportunity, okay. That's what we use every single day to trade the market with a high probability, guys and girls. This is the real information you will not find anywhere. Make sure you stick till then, and also make sure you smash the like button and also subscribe to the channel if you didn't do yet. There is a lot of content like this coming up every single day. So this candle, so you found it for a bearish, this is a bearish candle for a seller, okay. Now the same thing is applicable for a bullish candle, right? This is a bullish candle. The market open here after a little retracement, let's say, and then the bulls start to push the price well above this level. So this is an impulse for that period of time, and then the market corrected to this level, came to this zone, to this retracement level, and then what we have seen the market, we can expect another impulse, okay. So that's how the market moves, and we can take an advantage when you know how to take that advantage. Okay, now the next thing is where you should find this candle to predict this movement. This is the next thing. Now when you see this kind of bearish candle like this with a big body, at least 50% or more long wick, when you see this kind of candle in the middle of a downtrend or on a breakout of a structure, repeating again, when you see this kind of candle in the middle of a downtrend or on the way of a downtrend or on the breakout of a structure, high probability that the price will retrace at least half of this week, okay, at least 50% of this week. This is the situation with this bearish candle. Now when you see the same thing on a bullish market, this kind of candle on the bullish in the middle of an uptrend or on a breakout of a structure, you will see that in most cases it will go at least 50% of this long wick, okay. So now let's see in the real chart quite a few examples so that you can grab that information, rewrite in your brain, and next time you can implement in your trading. Guys and girls, this is the easiest thing you will ever find to integrate in your trading. So look at this one here, guys and girls. See this candle here. This is British pound US dollar, and the price is in a strong downtrend, right? This is a nice looking downtrending market. I'm replaying this chart, and you can see that. Look at this here. The price has broken out of this structure, and look at this in the middle of the downtrend, what it did. Okay, it created a candle that is almost half body, half wick, long wick at the bottom. High probability that at least the price will come half of this long wick, okay, even full. So let's see what happened next. See, this is what I was talking about. When you see that it left a long wick, see later what happened, the price didn't move directly from here. It could move, but when you see the price revisited the top of the wick, that is where the high probability trade comes, because first the price went there and then came back down. So when you are observing the market, when you saw after closing the candle here, the price revisited this zone, okay, that is where you can sell. You know that, okay, the price came here in this important area of value. Forex wizard told that when we see a candle like this week will be revisited, let's sell it. You can sell this, always manage your risk, and that's a good trade, right? Even if you target 50% of this week on the higher time frame especially, that's a very, very good trading opportunity, right? Now let's see quite a few examples. Now the previous one also the same example. You see that this candle here, let's do this one here. You can see that this long wick candle, the same thing. You see that the price broken out of this structure. As I told you that in two areas you can predict this candle with a high accuracy. In an area of when the price broken out of a structure in the direction of the trend, always keep in mind in the direction of the trend, or in the middle of the trend. So because it's a bearish candle, it has to be on a bearish market structure, broken out of the bearish market structure, or in the middle of the bearish trend, and that is a high probability. You can see that after retracement it start to move and created the same kind of candle. So when it creates same kind of candle, it will start to repeat the same kind of pattern, and that is where we can find a high probability trade setup. So let's see quite a few examples this kind, so that you can master this pattern today. Okay guys and girls, look at another example. Okay, keep in mind guys, very important is the trend. If you mix up with the trend, you will mess up with this kind of pattern. Make sure that you always read the trend properly. See, this is another candle, and the bigger the candle is, the health is bigger, is much better to predict the more accurately. Okay, you see that the long-term trend always dominates. Okay, this is a long-term downtrend. Okay, downtrend, and created a double top here, created a structure on the bearish candle, and you can see that creating a double top, and the price has broken down. Now this is the perfect candle that you are looking for, with a healthy body and healthy wick at the bottom. Now with that candle, what we have seen, look at this next, what happened. You see that the price immediately came down, filled that wick, and created another one. The next one is the same. Okay, you can predict at least 50% of this candle to the downside. You can see that it is supposed to come at some point. It should come. You see that the price finally came to fill that wick and created another one. Okay, so this one is not that much healthy, but the bigger the candle is, the healthier the move, the retracement of this candle. So let's see quite a few examples of this kind. Okay guys, so let's look at this example. Okay, this is a perfect example. You see there is a downtrend, a clearly defined downtrend, no doubt about it. The price was creating a series of lower high and lower low, and the price is dropping in the direction of the trend. Okay, and in the middle of the trend, you saw that this candle has been created. This is the perfect candle that you are looking for, in the middle of the trend, with a long wick at the bottom, with a healthy body. So what do you know? That the price likely to fill that wick at least 50%. So you might say, okay, then it's a very narrow gap. No problem, wait for the price to go up, okay, at certain level on the lower time frame, and then sell. That is where the high probability trade comes. Now if you look at this, you see that the price already almost went to the previous resistance zone. You see, this is the previous support as a resistance. That is where you can sell. You need to patiently wait for this price to reach at an area of value, and you know that it has left a wick at the bottom. That is a confirmation or probability that this price will drop. To fill that wick, it's a movement to the downside. Let's sell. And that's how you can catch the bigger trade in the market. Now let me show you some bullish example on this kind. Okay, guys and girls, so look at this example on dollar yen. This is a bullish market, and you can see it has created the exactly candlestick pattern that we are looking in the direction of the trend, uptrend, in the middle of the trend. You can see that this is a nice looking bullish candle. Okay, it has a long wick at the, not long wick, a wick at the bottom, and also long wick at the top. Okay, and it's in the middle of the trend, and it's a green body around 50%. So what we can expect after a little retracement, the price to fill that wick at least 50% or more of this wick. That's a probability, and that we can use in our strategy. Now if you replay the chart, you see that there is a big move happen after retracement to this previous a support zone here. That's a big move happen, and next one has created the same. So once you see that, you can see that this is a healthy market. There is a probability to fill that wick at certain level, and that's what happened. You can see that the price did the same after retracement to this level. It went above, fill that wick back to back. See how many candles did the same, repeated the same pattern. Guys and girls, smash the like button if you didn't do it. Now let's see more examples of this kind to master this pattern. Okay guys, so let's see this example. Now keep in mind that this strategy is very powerful when you look at a higher time frame. Why? Because let's say when you find a candle like this on the monthly or weekly, you know that there will be a predictable movement in the candle. And when you scale down to the lower time frame, such as on the 4-hour or even lower time frame, you know that this candle will do like that, will go there and will come back to fill that wick. So I can jump onto the lower time frame and find awesome trading opportunity. Now let me show you this example. This is a very powerful concept, guys and girls. You see that this is the monthly candle, and as you have seen recently my analysis and prediction on gold, how it came true. Now you see that this is the gold monthly candle. This is what exactly we are talking about, that gold was dropping on the monthly time frame every month with a strong impulse. It's a strong downtrend, and you can see that this is the last monthly candle, previous monthly candle, and the price just bounced from this level of support on the monthly time frame, created the perfect long wick candle that we are talking about. You can see this is the long wick at the bottom, and there is a body at the top. That is exactly that we are talking about. And see, this is the current market. Now look at this, what happened on the monthly perspective. If you if you cover that whole candle, you see that on the monthly time frame, the price exactly reached this resistance here, and then the price is retreating back to fill that long wick. Okay, this is really important. Now if you scale down to the 4-hour time frame, this is where you can see that the price from this monthly resistance now strongly rejected, and look at this, how much movement it has created to the downside. So when you know this, your strategy becomes very powerful, because you know that the market is predictable, so you always know which way to trade. You are almost 90% done in your trading when you see that the market direction. You know exactly which way market moving. The next thing you need to do, just find an area of value, support or resistance or a trend line for an entry with a price action, because you are confirmed about the direction, or your probability about the direction is very high. So just you need to add up the area of value for a proper entry point. I sincerely believe that this valuable lesson was helpful to you. If you find value in this, make sure you give a big thumbs up and also subscribe to the channel. Thank you for watching. I'll see you soon in my next video.